Good evening and welcome to this quick webinar on 9 key FP&A functions. FP&A is becoming a prominent function today in the finance world. I keep interacting with a lot of CFOs, and one thing I consistently hear is that they are increasingly finding it difficult to hire the right kind of FP&A talent because there's not just enough FP&A talent available out there. So we'll try and understand a little bit about FP&A role today and what are some of the key functions carried out by FP&A in their day-to-day routine. A little bit about us before we begin with. My name is Dhawal Parvatikar. I'm a qualified chartered accountant. I've completed my 1 year general management program from IIM Ahmedabad. Over the last 16 years, I've served as a finance leader in the Middle East across various companies ranging from oil and gas, advertising, public relations, commodity trading, and much more. I'm now the co-founder and lead faculty at FP&A Professionals Institute. Over the last 5 years, I've trained and mentored more than 5,000 professionals on various topics like FP&A, data storytelling, finance business partnering, CFO career coaching, and much more. I've also had an incredible opportunity to build a strong community of 200 CFOs in the Middle East. I've been part of 10 CFO events, somewhere I've gone in as a host, as a moderator, as a keynote speaker. It's been truly an enriching experience to interact with these 200 plus CFOs over the last 12 to 18 months. I'm extremely happy to have joined by my partner, Asif Masani. Asif, a quick introduction from your.
Hi, thank you so much, Dhawal, for having me. Quickly about me, I've been working in finance and very specifically in FP&A for over a decade now. Started working as an analyst back in 2013, and then my most recent role was as a FP&A lead for APAC and India for one of the world's biggest edtech company. So I worked in FP&A for many industries and many companies over the last 10 years. And in 2023, me and Dhawal decided to quit our full-time roles as FP&A leaders and CFOs and begin the journey with FP&A Professional Institute. And we've been training senior and mid-career finance professionals since then to achieve their career growth in finance and FP&A. I've had an incredible opportunity to have conversations with top FP&A experts across the globe. And what we do at FP&A Professional Institute is we try to bring all of that to you here, and we do that through our webinars like these, podcasts, books, the two books that you see on the screen, all about FP&A and from accounting to FP&A, and our courses and certifications that we do at FPI. So everything that we do, we try to bring in all the experience, not just me and my team and the house experience, but also the experience of top FP&A professionals across the world. So that is our been our mission, and we have trained more than 5,000 students across all of these certifications that you see on the screen, and that is what we do. We help more than a million finance professionals learn, and that has been our mission since day one. And happy to join Dhawal on this webinar. We will get back to the topic agenda.
Thank you, Asif. So what are we going to cover today? A quick roadmap. Over the next 45 to 50 minutes, we'll try and understand a little bit about FP&A world. Where does that fit into the organization and why is it gaining so much of prominence today? And then we'll understand a typical FP&A monthly calendar, some of the important activities in FP&A. What does FP&A do on a day-to-day basis? We'll try and understand a few things through the FP&A calendar. And then we'll dive into the 9 key functions in FP&A. What are the different activities carried out by FP&A? We are summing it up into 9 key functions. We'll try and touch upon each of them a little bit. And then we'll also talk about certifications in FP&A and how they can be beneficial for your careers as well. Okay. So a quick 45 minutes, get rid of all the distractions. Let's dive into the today's webinar. Okay. So where does FP&A fit into the organization? Right. So if you can visualize a typical CFO's office, there are multiple functions reporting into the CFO. Right? So there is financial reporting, who takes care of statutory, SOX audits, and all different kind of compliances. There's taxes team, which takes care of the direct and indirect taxes. There's treasury team, who takes care of the banking relationships, the cash flow management. Similarly, every function has a different role to play. Now, amidst all this chaos, somebody needs to keep an eye on the performance of the business. So that is where FP&A comes into play, where the main role of FP&A is to provide timely and accurate insights to the CFO and other senior business leaders in the company so that they can take informed business decisions. So that is where FP&A also enjoys this unique position of sitting very close to the CFO's office. And we are seeing more and more FP&A leaders becoming CFOs in the medium run. Now, what are some of the key activities involved in FP&A? So let's try and understand it with the monthly calendar. Whenever we talk about FP&A, people just think about budgeting and forecasting, but that is a very small part of FP&A. Budgeting and forecasting is not entirely FP&A, right? So let's try and understand through this calendar what FP&A, what are some of the activities carried out by FP&A teams.
Yeah. So let me, before we get into the different sections of the FP&A calendar, which is what do we do in week one, what do we do in week two, week three, week four, a couple of points. One is Dhawal already mentioned that as FP&A professions, we are involved in many functions and activities, and budgeting is one of the important functions. However, that usually happens annually, once in a year. So that is not a part of the monthly calendar because that doesn't happen on a month-on-month basis. You have typically a annual operating plan calendar which is prepared once in a month. So this calendar, what we are seeing, will not have any elements of the budgeting cycle, okay, which is a separate calendar which you will have once in a year. And second is that we'll be talking about the previous month numbers. So if you're talking about week one, we will be talking about the previous month close number. For example, right now we are in second week of November, and if you're talking about second week of November, and I'm talking about reporting, I'm talking about reporting for the October actual numbers. Okay, so I'll be talking about 1 week before, 1 month before where we report. And finally, uh, this is a average FP&A calendar looking at 20 plus different companies from different industries, from different, I would say, maturity in terms of the FP&A teams. So you might find certain FP&A teams might be doing better than this, and maybe some FP&A teams might not be yet there because they might be new in terms of the processes, they might be new in terms of the organization. So just keep in mind that this is a average FP&A calendar. I'll quickly repeat the 3 points. This does not include budgeting. It's a separate annual cycle or annual calendar. Second is we'll be talking about the previous month reporting numbers. For example, if we are in November, we'll be talking about October performance. And third is that this is an average calendar looking at 20 different organizations from different industries and different backgrounds. Okay, so with that context, I'll go into the week one. So week one is typically when you don't have your books of accounts yet closed, and the management is still looking for you and expecting that you will have a good estimate of the month end close numbers even when the accounting has not yet closed the books. Okay, so that is where the flash reporting comes in, where you take the estimate of the previous month actual numbers, whatever you have, and then you estimate the remaining portion of the month. It could be 27 days of actuals and 3 days of estimate, or it could be 30 days of actuals and then you estimate what are the adjustment entries or what are the closing entries going to be, and based on that you report the flash numbers for the previous month. Okay, so usually the flash reporting starts at the end of the previous month and it continues in week one. And once the books of accounts are closed, typically on the third or the fifth or the seventh day, depending on the organization, then the any teams can start doing the management reports, which are basically reports that are to be delivered to different business teams in the organization. For example, they could be doing a salary and a headcount report for the HR team. They could be doing a marketing report for the marketing team. They could be doing a sales report for the sales team. Okay, so that is usually week one, which is reporting, closing the books with the accounting team, and then management reporting. Once the management reporting reports are out, then you turn your focus to the forecast updates. What you do in week two is you typically pick up the previous version of the forecast. Okay, for example, right now we are in November, so the last forecast you must have done must be the October forecast, which would have been the 10 plus 2 forecast. 10 plus 2 meaning 10 months of actuals and 2 months of forecast. Now you would be picking up that 10 plus 2 forecast and you would be converting that into 11 plus 3. Okay, or you would be picking up the 9 plus 3 forecast and now doing the 10 plus 2 version, where earlier it was September YTD actuals and October, November, December was forecast. Now you have the October month actuals. So you can actualize October and then make that 9 plus 3 forecast the 10 plus 2 forecast. Okay, so you update the forecast, you get it reviewed from the business teams, you get it reviewed from the CFO. Once everybody has reviewed it, you lock it, and then you use that for reporting in the next reporting cycle. Okay, week three is more of analysis. So you've done a lot of management reporting and forecast reporting in the week two. Now what will happen typically is all of these reports will be get consumed by the business teams, and they will come back to you for further questions, follow-ups based on the reports that you have submitted. And some of your time in the week three will go on the ad hoc queries that come from sharing these reports or further analysis that gets asked based on the reports that you have shared or the presentations that you have done in the first 2 weeks. Okay, then there are ad hoc projects. A lot of teams spend time on automation so that it's easier for them in the next reporting cycle. And then risk and opportunity tracking is another important area. Once the forecast is in, you cannot just leave it at that point. You still continue to monitor what are the major risks and opportunities to your forecast number. If there are any material risk or opportunities, you should be highlighting that to the management. So that is typically week three. And then finally, week four is more of preparation for week one. Dhawal, if you can bring the week 4. So week 4 is again preparation for week 1. So typically many of the teams spend time on rolling forwarding the models for the next month. So whatever the preparation work that is required for week 1, and that can be done ahead of time so that it doesn't take time during the week 1, and you could quickly just update the files and refresh the numbers. So a lot of the setup work, either it is automated or it is done in the week 4, which is front loading any work that can be done earlier for the next reporting cycle. And then the flash reporting also continues, which we talked about in the week 1. So it starts at the end of the week 4 on the business day 27, 28, or usually it is called business day -5, -4, and then it continues to the next month, business day 2, 3, 4, till the time actual numbers are available. So that's in short the typical FP1. Week 1 is reporting, week 2 is forecasting, week 3 is more of analysis and ad hoc projects, and then week 4 is again preparation. Week 3 is analysis, ad hoc projects, and week 4 is preparation for week 1.
Amazing. So with that context in mind, so let us try and understand the nine key FP&A functions. Again, all these functions are not something which are carried out in isolation. They are part of the calendar. This should give you a good glimpse of what some of the important activities are in the FP&A function. So the first key FP&A function is budgeting, right? So most of you might be knowing that budgeting is an annual exercise. So what is budgeting? See, every company has the vision. The management, let's say by 2030, wants to double the turnover or triple the profits or enter four more geographies. Now, this management vision will just remain a wish if it is not converted into an annual action plan. That is where the annual business plan exercise comes into play, or the budgeting exercise comes into play. Imagine that budget is simply like a P&L or an income statement where you have your estimated revenue, various set of operation costs, and then you have your operating profit for the upcoming financial year. It is just an estimate. It's a blueprint for the upcoming financial year. In many companies, budgets are called with different names. They're also called as commitment, target, plan, and budgeting exercise typically happens before 3 to 4 months before the start of the financial year. For example, in 2026, now that we are entering 2026, most of the companies would be executing their budgeting exercise now. And by the time they are in November, December, they will have the budgets ready for 2026 and they get approved by the board and uploaded in the system. Okay. So here is a quick budget plan as well. So if 15 December is the date when you are going to present it to the board, then you will work backward and complete the CFO CEO review by 15th of November. And then if 15th of November is the CFO CEO review, then you need to try and liaise with the individual departments, collect your numbers, consolidate it, review it, do a round of back and forth to adjust it. And then in order to achieve that consolidation, you need to start preparing the budget. Prepare your template, share your templates with the management teams, discuss with various business teams to understand their plans, and then start compiling it by 30th of September. And the planning for all of this will probably start even a month before, sometime in the August, where you start planning your budgeting activity, coming up with your templates, guidelines, guidances for various departments, and that's how the entire budgeting cycle gets executed between August to December. The second most important function in FP&A is forecasting. Okay. Now, what is a forecast? Budgets, as we know by now, is a plan or a blueprint for the upcoming financial year. Forecast is simply tracking actuals for the completed periods plus plan for the balance period of the financial year. Now, let us understand this with one quick example. Now, the top table that you have is budget 2023. Visualize that you are at the end of November or December 2022. And here is how the budget for 2023 looks like, where you have your estimated revenue, different set of costs, and your operating profit as well. And you have a budgeted revenue number for the full year. Now, let's say we are already in 2023 and January. At the end of January, what I will do is I will look at my numbers, I will look at my budget numbers and retest my assumptions that I had during the budgeting exercise. Remember, budgeting I had done in November 22. So 3 months have passed. At the end of January, I will look at my assumptions, test them again. If they hold good, then I will repeat the budget numbers as forecast. Now you can see that the denomination has changed from BUD to FOR here. And this is what we typically call as 1 plus 11 forecast. So 1 month of actuals plus 11 month of forecast. If the assumptions are different, then I will go ahead and change these numbers at the end of January. I can make this 105, 107, whatever is the right number for, according to me, for the forecast. Okay. So this is typically known as a 1 plus 11 forecast. If you complete things at, let's say, if we reach March and we have actual numbers from Jan to March, then that will be a 3 plus 9 forecast. So 3 months of actuals and 9 months. So I hope you are able to appreciate the difference between a budget and a forecast. A budget is a one-time activity carried out just before the start of the financial year, whereas forecasting is an ongoing activity. It is carried out either on a monthly basis or on a quarterly basis, depending on the size and complexity of the business. The third key function is management reporting. Asif?
Just one moment. Yeah, I can see the screen now. Yeah. So can we bring this? Slides got stuck. Now I can see it. So you have the most common management report, right? On this. Yeah. Okay. So we'll talk about some of the most commonly used management reports that are used by most of the FP&A teams. And month end and the quarter end reports are the most common ones. What typically happens is you have a report where you have your actual numbers and you compare that with the budget and the forecast numbers, and then you do actual versus budget or actuals versus forecast. Some companies do it a year to date performance column. Some companies do a year on year percentage growth, or whatever month to date reporting. So based on the criteria that you want to review, you typically prepare a one pager report which has some financial metrics like the income statement, revenues and expenses, and also some operational drivers. And what you do and what you try to do is you try to correlate the operational drivers with the financial metrics, or you try to correlate the non-financial drivers, which are the operational drivers, with the revenues and expenses, which are the financial drivers, in the month end and the quarter end report. Then we already talked about the flash reports. So flash reports are usually of two types. One is where you are showing an estimate of the month end performance where you don't have the final numbers, and then second is where you do a more frequent report where you are either doing a weekly reporting or a daily reporting for an important KPI. So those are usually the two types of the flash reports. Then there is risk and opportunity analysis where you maintain a detailed tracker of all the risk items and all the opportunities that you see, which are after that you which are the after the second week, once you've submitted the forecast. And whenever you do the next management presentation, you look at the risk and opportunities tracker, and you create a simple slide where you list down all the material risk items and all the material opportunities items and present that to the management. Also, you can use the risk and opportunities tracker to be able to make adjustments to your forecast. For example, if there is a material risk and you feel that will be affecting your forecast in terms of reduced revenues or additional expenses, you could make those adjustments to your forecast in the next cycle as well. So that is on the risk and opportunities. And then there are certain performance management frameworks that usually companies follow. So some companies use balance scorecards, some companies use key performance indicators, some companies use OKR. These are different performance indicator. These are different performance management frameworks that different companies use, and we usually cover that in depth in our all our certifications in at FPI. So this is a little bit about the most common management reports and the performance management frameworks.
Thanks, Asif. The next key function is the variance analysis. In order to come up with all those different kind of management reports, you will need to do various different kind of analysis, and one of them is variance analysis. So let's try and understand what is variance analysis. So as we know by now, represents the plan for the financial year, and forecast are actually actuals for the completed period and plan for the balance period of the financial year. But the senior management is always wanting to know if we are on track. Are we on track to meet our budget? Are we on track to meet our forecast? So that is where we end up comparing different set of numbers, plan versus actuals, forecast versus act, and try and understand the variances. Once we compare the plan or forecast with actuals, we try and ascertain the reasons for these variances and the variances for why there is lower revenue or higher costs or higher overheads, whatever the case might be. Now, one thing what we need to all remember is that the management is interested to know the business reasons behind the variances. They are not interested in accounting reasons that last month we now we are over accruing. They are not interested in the accounting reasons. Last month we ended up with lower revenue because a competitor gave attractive discounts and hijacked our sales. Now that is a business reason, right? So this way you have to ascertain your business reasons and then put them in your management commentary so that the management can take some informed decisions. Sometimes take certain course corrections as well to revise the forecast for the upcoming financial year. The fifth key function that FP&A carried out is profitability analysis. Now, what is profitability analysis? Now, corporate profit, it wouldn't be an exaggeration if I say that it is a sum total of all the financial decisions taken in the company, no matter small, medium, large, right? If every decision that I'm taking in the company has either a direct or an indirect impact on the profitability of the company. So that is why it is important to ensure that each product in the company is sold profitably, each branch or a business unit is running in a profitable way, each service is delivered profitably, each subcomponent of the business is actually making profits. Now imagine an organization like KPMG, for example, right? In KPMG, a high performing statutory audit or an assurance department should not end up subsidizing a loss making management consulting department, right? That's not the best way to run the business. Eventually, every single department, every single subcomponent of the business has to be profitable on its own. Now, how do we ensure that? With profitability analysis. If you tell the management that the company's profits is $100,000, they won't be happy with it. They want to dissect it and analyze where is this profit coming from, which business units are the performing ones, which are the non-performing ones. And all of this is answered by various types of profitability analysis that companies carry out. Now, there are different types of profitability analysis depending on the size and complexity of the company. Here are some of the examples. If you're a product based company, then you would look at a product level profitability. Imagine a bank which mostly has different branches. They would do a branch level or a region level profitability. Imagine a level or a client level profitability that is usually carried out by an advertising company or a large services sector company. Infrastructure companies do project wise profitability. Retail and FMCG companies go for a distributor or a retailer level profitability, right? So this way they analyze the different subcomponents and try and unlock some efficiency improvements to increase the overall corporate profit. So that is the objective of a profitability analysis. The sixth key function is data analytics, Asif.
Yeah. So let me quickly take you through the data analytics framework where we start with the descriptive analytics and then we move to diagnostic, predictive, and prescriptive. So on the screen, you see a chart where you have value on one axis on the left and difficulty or complexity on the other at the bottom. So as you move from left to right and from top to bottom, from bottom to top, you move from descriptive and analytics, which is usually providing commentary on the historical information. So you're just giving in your comments or your views on looking at the historical data. While in diagnostic analytics, you figure out why did that particular happen. Particular event happen, or what was the reason for the variance, or what was the root cause for that variance, and that is typically what you do while you are doing variance analysis, which is diagnostic analytics. Then you move to predictive analytics, which is the forecasting part, where you try to understand what will happen in the next quarter or what will happen in the next financial year. That is where your predictive analytics comes in, which is typically what you do usually while you're forecasting. And then finally, the most important thing is for the business, what can they do now after looking at the forecast, after looking at the historicals? What do we do now, and how can we achieve our targets, or what can we do to be able to make sure that we meet our revenue targets or we don't overshoot our expenses? That is where the prescriptive analytics come in. So this is a short framework where we go from the historicals, which is descriptive analytics, then we go to variance analysis and diagnostic analysis, and from that we do predictive and prescriptive analytics. Okay, the next one in the key FP&A function is financial modeling. Financial modeling is typically where you have a Excel file which has some basic level of components, which includes your inputs, assumptions, scenarios, and the final output or the report. You have these elements where you are having assumptions, scenarios where you do base case, best case, worst case scenarios, and then you have the final model. It could be a restatement financial model, or it could be an expense model, it could be a revenue model. That is what you typically do in FP&A roles for modeling. So what we cover in the financial modeling for FP&A module in our certifications is usually the day-to-day use cases that you will be seeing in FP&A roles. So we focus more on the center part, or you see two circles on the screen. On the left hand side, you see the pink one, which has the basics of financial modeling, and on the right hand side, you see some advanced topics, for example, M&A modeling or LBO modeling or modeling for real estate transactions. So all of those are financial modeling techniques that you should be knowing if you want to go very deep into financial modeling and you want to become an expert. However, what is required for the role is how do you use the financial modeling best practices to be able to build budgets and forecast? How do you use financial modeling techniques to build business models, to build revenue models, to build cash flow forecast? How do you build a 1 month cash flow forecast? How do you build a 13-week cash flow forecast? How do you do scenario planning so that you are able to show the three different scenarios, which is best case, base case and worst case to your management and not just show one estimate or one point estimate. Then there is sensitivity analysis where you show what happens to the output or to the revenues or to the profits when you change just one variable. And then finally, there is capital budgeting where you learn techniques including the NPV, IRR, payback period to be able to evaluate longer term projects where there is an involvement of more than a financial year, where you'll have to also take into consideration the time value of money. So these are the topics that are usually required for your FP&A roles on a day-to-day basis. So that is what we cover in our courses on FP&A, on financial modeling for FP&A at our institute.
The eighth key function is data storytelling. Now, when we talk about data storytelling, one thing that comes to your mind is a dashboard, right? But dashboard is not data story. Dashboard is still information, which is an organized information. So, what are the key components of data storytelling? Typically, you start by looking at your audience. Are they senior? Are they junior? What is it that they expect? And then you reverse engineer the formula, that is, data story equals your data plus visual plus narrative. Now, data comes from different sources, structured, unstructured, from different ERP, EPM tools, right? And then you finally analyze that data and bring up your observations, and then convert it into an effective visual. It could be a chart or a graph, and then add your narrative or a message or your story, and then you deliver it to your audience. So this is a simple storytelling framework. Again, we cover a lot of practical examples and best practices around data storytelling in our certified global FP&A professional program. The ninth key function is business partnering. As if you want to quickly touch upon business partnering.
Yeah. So in the limit time, I'll just quickly cover the FBP framework that we teach in our CGFPA program, and we spend good amount of time on each of these there. But if you ask me what are the top three qualities that you need to become a good finance business partner, it will be these three. So you need to have very good understanding of the business. You need to be able to convert data, raw data, into information and the information into insights. Exactly what we saw in the data analytics framework, going from the descriptive analytics to prescriptive analytics, and be able to get those insights which are useful for decision making. So that is another quality of a good finance business partner. And then the third one is the building relationships. You as a finance person will not only deal with your internal stakeholders which are in the finance team, but also you will interact with a lot of business teams, including the sales teams, marketing teams, a lot of functional teams, including HR, supply chain, product engineering, and you should be able to confidently be able to interact with them. Not only just interact with them, but be able to guide them on their budgets and on their forecasts and all on their decision making requirements. And all of that will happen if you have or if you maintain good relationships in terms of your expectations and managing the stakeholders. So all of that is covered in the finance business partnering module in the CDFP program. This is just a quick glimpse of the top three skills or the top three things that you should be looking if you want to become a good business partner.
Amazing. Thanks, Asif. So now that we understand a little bit about the nine key functions in FP&A and what is the role of FP&A, what do FP&A partners do? So we have conducted our own CFO survey, and more than 100 CFOs participated in the survey. And we were able to decode five critical skill sets that CFOs today are looking for in their finance function. One is core FP&A concepts, your budgeting, forecasting, margin analysis, variance analysis, all your core FP&A concepts. Then comes your financial modeling specific to FP&A, revenue models, cost models, sensitivity analysis, scenario planning. All of that comes under financial modeling. Then comes your data storytelling, right? Using the right kind of story, visual data storytelling best practices. All of these things come under the data storytelling module because business teams generally are not great at understanding Excel sheets like how we do, right? And then comes business partnering. Business partnering is all about improving your business acumen and also your ability to build strong cross-functional relationships, because you'll not be working alone. You'll always be partnering with various cross-functional team members. And of course, last but not the least, leveraging the AI and technological developments that are happening out there to be far more efficient and effective in your roles, right? So these are the five critical skill sets that CFOs today are looking for in the finance function. Here is another statistic from the same survey. 79%, which is roughly about 8 out of 10 CFOs, say that it is generally difficult to find the right FP&A talent, right? And everybody wants experienced FP&A talent out there, but there's not just enough experienced FP&A professionals out there. So what can we do in order to bridge this demand gap? We at FPI have come up with our own certification program. It's called CGFPA program, Certified Global FP&A Professional Program. It is a global FP&A certification built and delivered by CFOs and FP&A leaders. It has 10 comprehensive modules, which we'll talk about it in a while. And then we have, it's all through experiential sessions and simulations, 100% practical examples, real life looking examples. And then you'll also be part of a global alumni networks. CGFPA program has been taken by students from more than 25 countries so far. You'll also get sessions with a personalized finance career coach. We also provide placement support. We help you refine your resume, your preparation for preparation with mock interviews, resume review. All of that is part of the placement support. We also have our own portal called fpnajobs.com, where we are putting all the efforts to kind of bring both recruiters and candidates in FP&A on one platform. We do a lot of monthly Q&A sessions where you can ask any questions to the faculty directly. External guest speaker sessions where top global area experts, top tool providers, they come to FPI for delivering guest sessions, which our alumni can take benefit of. And all this happens seamlessly through our online platform and best-in-class LMS, where you have all the resources which are easily accessible to you. Now, in the CGFPA program, we have 10 core modules, and I think the 9 key functions also, to a great extent, have covered or touched upon each of these modules, but we'll still spend a couple of minutes to explain about these modules. I'll let first Asif cover the modules that you see on the left, and then I'll take the modules on the right.
Yeah, so let me start with the introduction to FP&A, where we cover in detail with examples the budget calendar that we saw. Then we talk about different types of FP&A roles and how do you get started in your FP&A role. So that is typically what is covered in the introduction to a module. Then what we have is the core module of budgeting forecasting, which is where we cover the different methods of budgeting, whether it be top-down budgeting, bottoms-up budgeting, zero-based budgeting, incremental budgeting, the rolling forecast, traditional way of doing the budget. Also, the different forecasting techniques, be it the judgmental or qualitative forecasting, or the driver-based forecasting, or statistical way of doing the forecast, or using these days the AI and machine learning techniques to do forecasting. So all of that is covered along with detailed examples on each and every part of the budget and forecast, right from the revenue budget to the cost of goods sold to the production to the inventory to the headcount, marketing, salaries. We cover all the case studies with practical examples for you to be able to build the budget and forecast. Also, we have end-to-end case studies where you get real life looking data for the company and you can build the budget from start to end using the guided support from our LMS. So that is what we cover in the budgeting forecasting. For finance and FA is a very trending module. I would say it gets frequently updated with the changes that are happening, and we cover a lot of the modern tools that are used, including the large language models, which with whether it be ChatGPT, Perplexity, Claude, Gemini, Manus. A lot of these tools are now being used in your day-to-day life, and a lot of these tools help you become more productive, save your time, and increase your productivity. So a lot of these use cases for finance and are covered, along with some specific AI agents which are very specifically used for doing FP&A tasks, be it budgeting, forecasting, financial modeling, management reporting, creating presentations. So all of these use cases that we use ourselves and we have seen our clients use, we try to bring all of that to you in that AI for finance and FP&A. And as I mentioned, we update that every quarter. So every quarter we do one live cohort where we get in the most recent use cases along with the expert guest sessions that we have for that. Management reporting is another core module where we cover some of the topics. I'll just mention. We cover different types of management reports. We cover different management reporting frameworks. We cover topics on profitability analysis, variance analysis, recharges, allocations, all of this using real life examples and case studies that are developed by either CFOs or FP&A leaders. And then financial modeling for FP&A, I just showed you what is included in the financial modeling for which was the slide just we saw 10 minutes back. So we cover revenue models, expense models, statement financial models, best practices in doing the financial modeling, scenario planning, sensitivity analysis, cash flow forecasting, and capital budgeting. Those are some of the topics that are covered in the financial modeling for FP. I'll take a pause here and then I'll let Dhawal cover the rest of the CFP curriculum that you see on the right hand side.
Thank you, Asif. So one thing that is common in your FP&A roles is that you will be dealing with large sets of data, right? Both financial and operational data. And you need to know your way, how to navigate through that data. So that's where in the data analytics module, we cover Power BI, Power Query, and SQL. Again, we don't claim to make you an expert in these tools, but we at least take you to a level where you are comfortable using these tools in your day-to-day roles as well. Then in financial analysis, not just ratio analysis, financial analysis is far broader. This financial analysis is more from a CFO's perspective, internal perspective, different types of profitability, margins, mix analysis, all of that is covered in the financial analysis module, again with practical real life examples. Storytelling and presentation, and storytelling and presentation best practices, because see, business teams don't understand 10,000 lines of Excel sheets like we do, right? So we need to convert it into a proper visual story with a narrative. That is what we learn in the storytelling and presentations module. In the strategy module, see what happens is that as and when you start getting senior, the senior management will start talking a certain strategic language. And at that point in time, if you start using the term strategy very loosely, it may not be in your best interest. So in which case, we cover all the essential strategic tools and also explain to you how these are correlated with the FP&A role as well, and how FP&A can contribute to these strategic tools. And then finally, business partnering, where we help you understand about business acumen and also building strong cross-functional relationship with the business teams. We cover 8 to 10 good practical examples that we have implemented where we have actually partnered with the business to improve the performance of a certain business. So that's all about business partnering. So all in all, 10 solid modules in the CGFPA program. Don't just think about this as a course. It's probably Asif and my 20 years of experience packed into a powerful 6-month program. So that's what the CGFPA program is for you. Now, what is the eligibility criteria for the CGFPA program? You need to have a bachelor's degree or a global equivalent in finance, accounting, or business. Or alternatively, you may have any of the professional qualifications like CA, CPA, CMA, ACCA, or any equivalent accounting qualification of your respective country. Okay. We are also CPD UK recognized, and you can claim your continuing credits in your accounting qualifications. Now, how will you get the CGFPA award? There are 2 conditions. One is we meet every Saturday live for 2 hours. Okay, it's a live program, so we meet every Saturday live for 2 hours, and you need to attend the live classes, at least 50% of them, at least 50% of the classes live. And then after that, there is a capstone project that you need to submit before the stipulated deadline. These 2 things will make you eligible for the final examination. And then there is a final examination, which is a 2 hours, 100 marks proctored examination, multiple choice questions type examination, which once you clear it with a minimum 50% passing marks, you will be awarded the CGFPA certificate from FP&A Professionals Institute. We are an independent body at this point in time. We are not associated with any other accounting body at this point in time. Okay. The ROI for a course like this, I leave it to your imagination. The course fee investment in this program is USD 1795. Typically, this comes with a different payment plan as well. And we also have some early bird offers if you are able to apply before the deadline. And then the duration is for 6 months. There'll be live sessions conducted for 6 months, and the recordings will all be uploaded on our LMS as well. The next cohort is starting on 10th of January 2026. Admissions for that have already been started. Totally, it requires a weekly commitment of 3 to 4 hours, okay, and not more than that. 2 hours of live classes, and apart from that, you need about 60 to 90 minutes of your own preparation. 60 to 90 minutes of your own preparation in the program before you come to the live classes, because try and maximize the time in the class for practical case studies, right? We don't want to spend time on too much theory on explaining the basics. So that's where we maximize the live session. So totally about 3 to 4 hours of your own time commitment is required for the program. Okay. So as a next step, what you can do is that if you're interested in the program, make sure that you submit the application before the stipulated deadline. That is 30th of November is when the second cohort is closing. And so please complete your applications before that. Asif has shared the application link in the chat box. Please go ahead and submit your applications. Application is absolutely free. Once you submit the application, our academic counselor will review your eligibility, and they will reach out to you with the early bird offer and also some demo lectures if you want to look at some demo lectures, if you want to look at some examples, of what we covered. So those are all things that we normally share with our applicants. So feel free to go ahead and complete your application so that you get all these details. Don't just take our word for it. There are tons and tons of testimonials. Again, you can reach out to any of our alumni. If you academic counselors can share the numbers with you, you can talk to them, you can speak to them, and try and understand how CGFPA program has been beneficial for them. Many of them have been able to transition into FP&A roles. Many of them have been able to implement a lot of frameworks that they have learned in the class in their existing roles as well. So feel free to reach out to them and try and understand more about the CGFPA program. Okay. Just a quick reminder again, the second round of applications for cohort 7 closes 30th of November 2025. Make sure that you fill in your applications before the deadline.
Thank you so much for joining, and hopefully we'll see you in
Yeah.
one of our future webinars or one of our certifications.
Cool. So Asif and I are always available on LinkedIn. If you have any questions, feel free to DM us. Happy to answer any of your questions about FP&A, about the certification, or about anything generally about your finance career. So feel free to ask any questions.